Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. The July corn contract has found some legs after it found support at 369. Bouncing off of 369, it has since moved up through resistance at 388.5, and our next key level of resistance sits at about 408 and a quarter. We are also moving into our timeline of May 23rd, which is essentially at the end of this week, and we believe that as the market progresses on its way up here, we're looking for key resistance to occur somewhere in the neighborhood of 408 to 415. If this contract is actually able to make it up even that high, we do believe that a very strong resistance will occur near this area, at which point we have the possibility for the market to make a next leg down. If it is somehow able to find legs and break through that 415 area, then we're looking at a move that could possibly challenge the point of control of 433, at which point we would see a very strong move up and through that area. So the coming timeline at the end of this week and early next week, in conjunction with the 415 number being broken, is going to be a very important area to have on our radar to really test the nature of the strength of this corn move. December corn finds itself in a similar position where it is currently testing resistance at about 405 3/4. The next level of resistance above is about 416. And if it's able to make its way through the 418 number, we believe that a challenge of 426 is possible. But as it sits right now, we do believe that we have a potential double top opportunity where the market can find some weakness, but right now we have to go with the strength that we're seeing. Current pricing for the December contract is in line with one standard deviation above the point of control, currently trading at about 404 3/4, and the point of control sitting at about 403 1/4. Now, strength through this level would send us up to about 418, which coincides with the level we just saw just a moment ago. So moving up through 418 is going to be a very important area for this December contract. After the USDA report last week, soybean managed to have a limit up day and find resistance exactly at our natural trend line. After that time, the market actually declined for about 4 days and has since bounced, but again, we're finding resistance near our natural trend line. It's important then to notice how the market then reacts to this area as we approach the May 23rd timeline as well, similar to that of the corn contract. The pattern that we're seeing is a nice bull flag here, and what we're looking at is the market's actually able to break clearly through this area. The next level of resistance that we're looking at is at about 1100. So if this contract actually moves up and continues to have resistance either near our natural level or at 1100, we're predisposed to seeing a potential decline from this point. But a break from this current area is not outside of the line of possibility. Pricing as of today are sitting very close to 2 standard deviations above the point of control. That level is 1078.5, and current pricing is sitting at about 1075. And so we're seeing a bit of confluence in both sets of analyses with regards to price resistance here for these current markets. So even after the nice bounce that the market had yesterday, today we're seeing a little bit of weakness and the inability to have follow through through that price threshold that we did see from yesterday. The November contract is much of the same, and we have very good solid resistance sitting at 1086.5. You'll notice that as the market came in and made that limit up high over the course of the next 4 or 5 days, the market was not able to come back and break back above those resistance levels. You'll also notice that we found good support here at about 1053.5 to 1053 3/4. And so again, as we look at this market coming into the 19th to the 23rd timeline, as he moves up through here, a break of 1087 is going to be key if it's looking to challenge 1100 to 1120. One standard deviation above the point of control currently sits at 1065 and 3/4. And really, this has been operating in some fashion as a natural node where we see even amounts of price action on either side. And so really a clear break of either that limit high day or the recent low that we saw. A break in either direction should give us good momentum and follow through in that direction of the break. July week recently tested the 455 half number and found very good support there. The last time he tested this area, we'll see that we had great support as well with a very nice bounce. And now he has since moved up and is testing resistance at our 180-degree mark of 487. The last few times that he's tested this mark coming up from 455, we saw the market had a challenging time getting through that number. And even the one time that he did get through recently, he dropped back down below and continued to find great resistance in this zone. We also have overhead volatility-based resistance at 491 up to about 504 and a quarter. This area is going to be very important for him as we believe that as he makes his move up, he should find good resistance inside of this area. We have confluence between the 180-degree mark in conjunction with that volatility-based resistance. And so right about that 500 number, which is a very common even number for the market here, we believe we'll have very good resistance. In addition to that, the stochastic has gone from being oversold and is on its way up to being overbought. So upon getting up into this region, if it gets up there in conjunction with weakness, we believe that a nice move to the downside is likely. In terms of some confluence here, we have our point of control that sits at 482 half, which is exactly where the market is trading right now. One standard deviation above that level sits at 516, which is well above where the market is, but that would be a test of previous highs itself. We were looking at this ABC formation where we were looking for the market to make a move in comparison where the AB leg would mirror a CD opportunity or a CD movement itself. The areas for that D level to terminate came in for us at either about 457 and 3/4 and even as much as 447. It looks like the 457 3/4 number was the magic number and the market has since advanced from there. We think this high that it made several weeks ago is very significant and it's going to need to get through this C level here if it's going to really move higher. Beyond that, then, we do think that a very good resistance will probably occur somewhere nearby where the market should make a move back down. In closing, we'll have a look at the crude oil contract. Previously, we had a wave 5 high coming in right about the zone. And really for about 6 to 7 trading days, we had very good downward movement here, and the market found support somewhere just below the 44 and a quarter number. Since then, we've been able to mark off a small 5-leg sequence in this wave 5 move, where you see the wave 1, 2, 3, 4, and potential 5 here, that is actually coming in and touching near our end band where volatility-based resistance lives. Now, given that the market came in and made this initial high at resistance, we like the fact that he came back down after this move, but it looks like he's making one final push before making what can be another significant top. And so we saw this move happen at the beginning of our time channel, and so now we're looking at a move up that may actually terminate near the end of our time channel and then give us a nice move down. Earlier this week, we had Goldman Sachs decide to flip from having a very bearish stance over the last 2 years to deciding that near term that crude oil might in fact be a bit bullish. We're seeing this now after their announcement, a bit of a leg up into that move, but really he is still due for a nice decline. And we're looking for a retest at least of that 44 and a quarter once a top is confirmed. We're looking at three potential spots here for that potential top to come in, maybe around the 52.75 to 53 number, maybe about 51, and or currently where we are right now, as in today's pricing, we see a little bit of softness after touching up against that 48.38 number or resistance. So just shy of that 45-degree mark of 49.75. So any one of these areas could end up being very good resistance for another leg down, for a move that should be at least as long as this previous swing that we saw from the wave 3 to wave 4 low here. Thank you so much for joining us for our weekly market update, and look forward to touching base with you again next week.